Where do you see opportunity? Tech obviously has had such a monstrous first half of the year. Is it risky to still play this?
Certainly, it's riskier than it was. I mean, the stocks have done remarkably well, better than I think I would have anticipated. You know, we had in our minds starting this year that there would be macroeconomic risks that really haven't materialized, which has meant that the ad-driven names in particular have been surprisingly strong. You know, so from here, I think you have to be, careful. We do still see opportunity in a name like an Alphabet, in the belief that if the economy remains durable, that you can see some improvement in the trajectory there that is not yet fully priced into the stock. Apple, we've been constructive on. The stock is nearing our price target, but we still remain, with a buy rating on Apple. And I do believe that a lot of the concerns that have been aired in terms of the conversation around Apple can be rebutted in the back half. I do think that they've got a very easy compare on iPhone from the supply disruptions last year. And I think Vision Pro can be a slow burn. I think nobody has anything material near term, but I think over the next few years, this could become an interesting category that excites imagination and gets people thinking opportunistically about the long-term future for Apple.
Barton, is the preference for Alphabet, is that relative to Meta, which has had just a really ripping run so far this year?
Yes. I mean, you would have asked me this question. In fact, I think you did a few months ago, and we would have preferred Meta.
Yeah.
But they've just performed so well. It gets harder for me to make a valuation-based argument for Meta relative to Alphabet. They're both great companies, and they're both well-positioned in an ad recovery. It's just a lot of that's already priced into the stocks, given the first half runs.
Barton, when it comes to Alphabet, is there a sense that it's sort of righted things in terms of its strategy for generative AI, that BART is going to be enough of an answer, or is there still a sense that it lost some sort of a long-held lead and is still threatened, perhaps, by Microsoft when it comes to search overall?
Look, I think the jury is incredibly out on the service impact of AI. Certainly, I think there's no debate that there's going to be substantial investment, which has been great for the semi-stocks like NVIDIA. But in terms of the services impact, I think what we're seeing with search is that Google's share is strong, not fading. I think that we're seeing ChatGPT at Microsoft has been more incremental than taking share. It's more expanding the market than, stealing from Alphabet. In terms of what really is exciting longer term is the potential, I think, for there to be new generative AI kind of outcomes. So, we wonder about things like music, outside of Alphabet, things like Spotify and what that could mean for them. But I think the jury's still out, and it's early to make a big kind of call on what the consumer impact is going to be of this very incredible technology that's burst onto the scene.
Well, I'm curious then, what are you talking about when it comes to Spotify and music, just given you mentioned that?
Well, I think that, the idea of music being generated by AI, and does this create an expansion of the supply funnel for music that enables someone like a Spotify to do better things with the cost of music, which is the number one kind of headwind for that equity. We have a neutral on Spotify. We're not there that there's a transformative position right now. I think the stock has done great this year on expectations of price hikes. But generative AI, if you're looking for the next kind of shoe to fall, that's the type of area where I think, you could see some fruitful, things to examine over time.
You also cover other kind of mid-caps, Pinterest, Roku,
Yeah.
Snap. Do you see a reversion to the mean for those mid-caps in the second half of the year? Do you think still with kind of where the rates are currently that these, less profitable or unprofitable companies just still don't have room to run in this environment?
I certainly favor companies with an E, for the valuation argument. I do think that the ad market has not been beat up by the macro like we expected, but I still think it's not like clear sailing to growth in advertising. We have easier compares, but I think the stocks that are ad-driven, like a Snap, like a Roku, like a Pinterest, we don't really have great earnings support right now, and you need to see a real kind of reset in estimates, which I'm not ready to do at this juncture. I look more kind of special situations, so stocks that have been beaten up on sentiment that can recover, like a Live Nation. There's been a lot of concern around the regulatory that I think is not going to amount to really much. In a special, situation, value play in the small cap land, like a Stagwell, a digital first kind of marketing services company. and Lionsgate, an entertainment company that's splitting up into its pieces, playing into what I think, can be an interesting consolidation theme in the media part of it. That's where we're more interested today. But in large cap tech, a quality name like an Alphabet with earnings underneath it is, I think, where we're more interested at this point.
Interesting. Barton, thank you so much. Thanks for being here.
Thank you.